The development and types of banks. A. The development of banks. 1. The origins of banking worldwide. Ancient times, 2000 BC. Banks initially served as places to store valuables such as gold, silver, and agricultural products. In Mesopotamia and ancient Egypt, temples were used as secure storage locations. The first bankers were priests, trusted for their integrity by the community. A Roman and Greek times. Banks began offering services like money lending and currency exchange. The word bank is derived from the Italian word banco, meaning a bench, where merchants conducted transactions. 2. Banking development in the Middle Ages. Banks in Italy, 12th century. Italy became the banking hub of Europe, especially cities like Florence, Venice, and Genoa. The Monte dei Paschi di Siena, 1472, is one of the oldest banks still operating today. Banks supported international trade by providing credit and financing. Bank of England, 1694. One of the first central banks established to ensure financial stability in England. It acted as a guarantor of national debt and a financial regulator. 3. The Industrial Revolution era, 18th to 19th century. The Industrial Revolution increased the need for credit and capital. Banks began funding large projects such as railway construction, factories, and infrastructure. The banking system became more organized with the emergence of modern banking regulations. 4. Modern banking, 20th and 21st century. Globalization era. Banks started operating across countries to support international trade and investment. Multinational banks like Citibank, HSBC, and Deutsche Bank emerged. O digital era. Technology transformed banking operations with services like mobile banking, internet banking, and fintech. Digital-only banks with no physical branches, such as Genius, Blue, and TMRW, gained popularity. 5. History of banking in Indonesia. Kolonial era. De Javash Bank, 1828, was established by the Dutch colonial government as a circulation bank. Other banks, such as the Nederlandse Handelsbank, NHB, and Eskamte Bank, served Dutch trading interests. Independence era. Bank Negara Indonesia, BNI, was founded in 1946 as the first state-owned bank. In 1953, Bank Indonesia officially became the central bank, replacing De Javash Bank. Modern era. Following banking deregulation in the 1980s, many private banks emerged. In 1992, Indonesia's first Islamic bank, Bank Muamalat, was established. B. Types of banks. 1. Based on functions. 1. Central bank. Regulates and supervises a country's financial system. Example, Bank Indonesia. Main roles: issuing and circulating currency, maintaining monetary stability, supervising the banking system. 2. Commercial bank. Provides banking services to the general public. Example, BCA, BRI, Mandiri. Services: deposits, loans, transfers, and credit cards. 3. Rural banks, BPR. Focuses on financing small and medium enterprises, SMEs. Does not provide services like foreign exchange or money transfers. 2. Based on ownership. 1. State-owned banks. Fully owned by the government. Example, BNI, Mandiri, BTN. 2. Private national banks. Owned by local private entities. Example, Bank Mega, CMB Niaga. 3. Foreign banks. Branches of banks headquartered abroad but operating in Indonesia. Example, Citibank, HSBC. 4. Joint venture banks. Jointly owned by local and foreign entities. Example, DBS Indonesia, ANZ. 3. Based on operations. 1. Conventional banks. Operates based on an interest-based system. Serves the general public with a range of financial services. 2. Islamic banks. Operates under Islamic principles, avoiding interest and utilizing profit-sharing systems. Example, Bank Syariah Indonesia, BTPN Syariah. 4. Based on business scale, Buku classification. 1. Buku 1. Core capital, IDR 1 trillion. Focuses on domestic services. 2. Buku 2. Core capital IDR 1 to 5 trillion. A limited international services, including foreign exchange. 3. Buku 3. Core capital IDR 5 to 30 trillion. Engages in international transactions and digitalization. 4. Buku 4. Core capital IDR 30 trillion. Operates on a global scale. C. Technological developments in banking. 1. ATM, automatic teller machine. First introduced in 1967 in England by Barclays Bank. Enables customers to withdraw cash and conduct transactions without bank staff. 2. Mobile banking and internet banking. Banks offer apps and websites for transactions. Features: transfers, bill payments, and investments. 3. Digital banking. Banks without physical branches. Examples: Genius, Blue, TMRW. 4. Fintech, financial technology. Technology companies providing alternative financial services. Examples: OVO, GoPay, Dana. 5. Blockchain and cryptocurrency. Blockchain ensures secure and transparent transactions. Bitcoin and Ethereum are popular cryptocurrencies. D. Role of banks in the economy. 1. Providing capital for economic growth. Banks lend money to small businesses and large corporations. They support infrastructure and industrial development. 2. Improving public welfare. Banks help people save and invest. They offer products like insurance and pensions. 3. Managing financial risks. Banks provide risk management tools, hedging, for businesses through financial instruments. 4. Promoting financial inclusion. Banks reach remote communities through banking agents and technology. Conclusion: banking has evolved from being a place for storing valuables to becoming a complex global financial system. Banks play a crucial role in driving economic growth, providing financial services, and adopting modern technology to meet societal needs. The diverse types of banks cater to various needs, from conventional to Islamic and digital banking.